Good morning all and welcome to today's video. I hope you had a great weekend. I have two pairs on watch today and those are CAD Yen and Euro Dollar. So my favourite of the bunch is CAD Yen and the narrative as I see it is as follows. We have this high here, okay? We come all the way back up, we near miss to that high. We scoop all the way back up. Usually, if you've watched my videos, you will know that typically speaking, when we have these highs and we have a big sell off from them in particular, we usually near miss to them, come back up, break the high, and then push to the downside. Okay, which is exactly what happened. In this instance, this is where we would have anticipated a follow through. So we had that near miss to that high, tapped into the high, broke above, caught people the wrong side of the market. We had a little scoop double top before we committed. Sometimes that happens. Here is where I would have anticipated a correction for the next leg lower, okay, to potentially take out these lows here. We have a near miss to that low and a near miss to there. That is where longer term I would have anticipated a move to the downside, okay, and this just being the volume accumulation for that next leg to the downside. However, in this instance, price did something a little bit atypical for this kind of correction. Typically speaking, if we have a wider correction like that, like this rather, okay, what can happen is that we price it becomes more neutral and then we push to the upside to do what price seems to be doing at the moment, but not typically when we have slightly smaller corrections relative to the impulse down which has preceded them. Okay, so nothing happens all of the time and nothing happens none of the time, as I always say, but we're, as risk managers, we're just trying to identify what is the most probable. Okay, we're not trying to be right like many people are across the trading spectrum. We're just trying to err on the side of the probable, not what happens all of the time, because nothing happens all of the time. So anyway, we scoop back up. We have these highs here. If we just analyze this at the time, this is a bit more complex, but we have a slight near miss to that high. We near miss to that high again, tap into it, but we move down. And this is why I always say, how have we moved? We move down correctively. Okay, so we move down from the area and we pull back. So we near miss to that high by way of this high. We come back down, but then we pull back. If we just measure this, we pull back about 75 to 80% of the range. Okay, that's not typical if we're going to head to the downside from there. So already when I see a pullback of that steepness, that already gives me a clue that we're likely to perhaps break some of these lows or tap into this low to find our way back up to take out this high and this high, both of these highs, the near miss and the high that we near missed to, potentially tap into that and potentially move to the downside from there. Okay, so once again we see that sharp sell off, near miss, we tap into the high, and what I'm looking for now is potentially a sell off. Okay, if you just analyze this on the weekly chart, you can see that we do have some bullish momentum now. Bullish momentum by way of last week's weekly close. That is a factor in my thinking, and that does slightly tailor my entry. If we just zoom out to the weekly, we still have this candle hasn't closed. Zoom out to the monthly rather. This candle hasn't closed, but the last candle was very bullish. Last week's close was very bullish as well, but we did wick above the area of value and we did wick above it, not just to it. Okay, so that's a positive, though we do have to remember that it's bullish. However, I'm just seeing this as potentially, if you just look at the daily close, I'm seeing this as potentially a premature evening star formation for a move to the downside. Okay, but once again, we do have to remember that we have a lot of momentum there. And the other thing that we have to factor in is if we zoom right out to the monthly, another thing I'm factoring into my thinking is that if you assume that this is the impulse down and this is the correction afterwards, this is a prime example of what I was saying a minute ago, where when we have an impulse down and then a correction which is this large relative to the impulse that has preceded it, there's always the possibility that we could be seeing a move up to the upside to tap into that high, and then this becomes that kind of M style pattern for the sell off from there. So that's another factor in my thinking as well, longer term. Okay, so if we just zoom in, so because of that, what I've just said, and because we have come from an impulse up, there's always the chance that this could actually be just a very large bull flag to push higher. Okay, to tap into those higher time frame highs, which you can't even see now because they're on the monthly chart. So that's a factor in my thinking as well. So what I'll be looking for specifically from this pair today, we just get that off of the chart now. I'll be looking for a break below here. Okay, so I'll be looking for a break below this area of interest. That's the area of value now, and this is just an area of inflection. Okay, I'll be looking for a break below there, and then we will have retraced approximately. We would have retraced by that point 50% of this impulsive leg, which is usually an indication that we're going to move to the downside. Okay, and if we did that, if we just zoom out, we would have that confirmed. Well, we would have that evening star formation. It wouldn't necessarily be confirmed by this point, but we would have retraced approximately 50% of the length of that candle there. Okay, and we would have retraced about 50% of the length of the body of the weekly candle as well, and that to me would likely open the floodgates for a move to the downside, and it would negate the possibility of this becoming that larger bull flag which I was talking about to push higher, to tap into that higher time frame high. Okay, so what I'll be looking for specifically from this pair, with that in mind, is I have an alert set just above that area of inflection there. If we break below that, you can already see that we're wicking. Okay, that's often an indication that we may be getting some kind of bull flag to push higher, which potentially retests the inflection point, and then we end up with something like that. Okay, so already that wick there is showing me that potentially this could be a larger bull flag to push higher, and this is just the near miss to the area of inflection, and then we come back up like that, take out that low which we near missed to, and then move to the upside from there. So to negate all of that, I'll be looking for a 1 hour impulse down below the area of inflection. I'll be looking for a 15-minute consolidation, 6 to 8 corrective 15-minute candles, and then what I would do, if we got the two bottoms, I would set the order on the break, and then I would drill down to the 5-minute chart to see if the 15-minute consolidation was structured, and if it was, I would look for the risk entry from within the structure, and then I would cancel the original order. If I didn't get that, then I would let the original order trigger me in. Okay, and then I would be able to manage it down to these lows as a first target for something in the region of 4 to 4.5%, depending on the size of the structure and which entry I was able to get. Okay, and then what I would do is I would manage this down to the next inflection point. We would have something in the region of 7%, where I would personally set a take profit. Okay, so you can see we had a big rally from there. So if price was to react from there, this implies that there's a lot of liquidity there because of how we rallied to the upside. Okay, that was a big move. So what I would do is I would measure from range to range. I would measure from here down to there. I would set the take profit at the 90% rule there, and I would trail my stops accordingly with that take profit set as well. Okay, so that is what I'll be looking for from CAD Yen. And of course, if price just trickles around in this area, then I'm not going to be looking to place a trade on it. Already, we have a little bit of a sharp pullback there. This could be, a tight flag which pushes lower, but again, you run the risk of being tagged in if you got short on that or within it, and then that bull flag forming that I was talking about because of this impulsive move to the upside and all of the other factors which I've just spoken about. So that is CAD Yen, but if we got that, we would be well positioned. Okay, the sequence would likely be okay if we just dropped out from there, and the entry would therefore be okay as well. So that is CAD Yen. Moving on to euro dollar. Euro dollar's positioning isn't quite as good because we've tapped into this low here, and I'll be looking to get short from that today, but I shall explain all of this thought process. So we have that consolidation there. We rally to the upside from there. Okay, this is the last line in the sand. The sellers got short here. There wasn't enough liquidity here to send price to the upside or here. So once we broke below that, it's no surprise to me that the sellers would be looking to get out here, where that last area of consolidation and volume was built for that move to the upside. So that the sellers got out of their positions here. It broke below, bargain area of value for a buy. We move to the upside. We tap into this area of consolidation by way of a reversal structure. Okay. We then have a series of near misses here. And there's the base, this near misses to here, this near misses to here. We break below, bargain area of value for a buy. We move to the upside. So there's no need for us to come down to there at the moment. Come down to that area. You can see we have, we just drill down. Yes, we have this. I was just looking at this. So we have this low, we have an area of consolidation here. Okay. And we near miss to that area, come back up, tap into it, and then move, break above, catch people the wrong side of the market. And then we have these series of impulse correction continuations. You can see it's been a bit of a corrective wave, which already gives me a clue that we may be moving to the upside to potentially take out these, maybe this high or this high here, and then we would have that kind of, this kind of structure. Okay. However, you can see what we've also done is we've blasted straight through this correction here. Whoops. We've blasted straight through that correction, and then we've moved up very correctively, suggesting that this is just a bit of profit taking at this area and not necessarily a move to the upside, because this is, we would not typically move up in this way if we were just going to blast to the upside. So that just gives me a clue that this is people taking profit at this area, and that we're coming up to retest the back end of all of this structure. And one of the things that makes me think that is because we have a little sharp inflection point there. Okay, price has tapped into that area now. We're moving down correctively. That could be due to the Asian session. Okay, this is obviously out of session at the minute. It is 6:20 a.m. as I speak. But what we may see is a move down to potentially all the way down to take us down to there, and then potentially take out that low where there was a sharp run off to the upside. And one of the reasons that makes me think that is if we just flip to the DXY, which is the inverse of euro dollar, you can see here we've had this impulsive move up followed by sideways corrective price action, which will likely take us up to this next high here. Okay, you can see if we just drill down to the 1 hour chart on the DXY, you can see that we have this little base here, the same thing but in reverse. So we have the near miss to it. So it wouldn't surprise me if we come down, take out the near miss and the inflection point, which we near miss to, and then we would have this kind of structure where this is the middle section for that move to the upside. Okay, already when we pull back, when we tap into an area and we pull back sharply like that, that is already given me a clue, especially when we've come from an impulse up, that this is a larger bull flag to push higher. And if you look at this here, we would also be retesting the back end of this, all of this volume, and likely all of this volume that was built there will give price the legs to push higher, okay, to take us into this area here. And if that happens, obviously euro dollar will move to the downside. So that is the thought process. So with that in mind, what I'll be looking for, I'll be looking for price. Price is now tapped into this area. Okay, it's moving down correctively. As I said, that may be just Asian session low volume. Okay, but what I'll be looking for now that we've tapped into that area is a 1 hour push down followed by a 15-minute correction, just as I was looking for on CAD Yen, and then I would be looking to get short either on the break or within it with a 5-minute risk entry if I could get it, and then down to this first sort of sharp move there, I'll be able to manage it for 3.5%. Down to the low, we have approximately 5%, depending on size of the flag, etc. And then what I would do, I would once again use the mechanical management system, and I would set a take profit there. And if we got down to the area, so I would measure from, where are we? Fibonacci. I would measure from there to there. Okay. And then we would have something in the region of down to that area, because we may reverse from there or see a sharper pullback. We would have 9.5% down to there. So I would trail my stops accordingly. Okay. Whilst with the take profit set there as well. And that is pretty much all I'm really looking for, folks. And then potentially, one of the reasons we may only get 90% of the way, as I said, is because we may reverse from there and then get that kind of structure which taps into that high there, and then that becomes like that, okay, and that becomes the middle section. So that is the thought process. I hope you enjoyed this video, folks. I was just looking at the weekly candle, okay? So we do have this kind of weekly kind of low test there, but it is bearish, okay? So even if this was a move to the upside, a lot of the time these bearish wicks get filled, okay? So it would likely fill before moving to the upside, even if that was going to move to the upside. So that is just the thought process. I hope you've enjoyed this video, folks, and I will see you again in the next one. Thanks very much for watching.